Today, we're going to talk about the Dow Jones Industrial Stocks dropped 900 points today on Black Friday. And I'm going to talk about 4 reasons why we are in an expanding economy. Ladies and gentlemen, I've been gone for a while. I want to say I haven't been on live in probably about a week or 2, but I'm getting it started back up to get back live. Had to get a couple of things knocked out. Been working on a couple of businesses and things like that or whatever. So this kind of fell on the back burner. But I'm back now. If you are able to come in and catch me live, drop a comment below and tell me where you're from. And we're going to have some fun tonight. All right. So if you haven't done so already, ladies and gentlemen, go ahead and make sure. Hit the subscribe button. Hit the bell icon. Hit that like, comment, and share button. Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. And as always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. Ladies and gentlemen, boys and girls, and children of all ages, you know what we're here to do. I want to appreciate everybody that's been patient with me and my platform. I've been gone now for the past week or 2. I was on the road doing some traveling, handling some business, getting things done, getting caught up with a lot of things. So I thank all you guys and girls. Show some thumbs up. I definitely appreciate all the people that are in here live already right now. Pretty good numbers. So thank y'all for holding me down, even when I'm gone, to still be tuning in and following this show and sharing this show and things like that. I'm definitely glad to be back. And I'm glad to be back on Thanksgiving. I got a time to rest up. I'm not going to sit here and lie, ladies and gentlemen. I had to take some time to rest. I wasn't getting enough rest. I was spending a lot of time doing my podcast. And as y'all know, also as well, I'm active duty military for the last 18 and a half years, balancing everything, businesses, podcasting, books, and, all these other things that I don't really want to get into. But I had to really sit back and take some time and rest and recuperate. Hopefully I said that right. So, and to really relax and drink some more water and start to take better care of myself. So I really had to clear my mind, get some schoolwork done, get some reading done. But I definitely miss doing what I love to do. And I'm glad to be back tonight and today. So let's get into it, ladies and gentlemen. Let's talk about what's happening right here today in the news. So here we go. This is why. Let me see what y'all say in the comments before I get back into it. So, okay, the first comment, I see somebody was here earlier. We got a troll here. It says, Open Range says, this channel is dead. Well, thank you for tuning in to remind me that my channel is dead. I definitely appreciate it. Kendra Taylor, what's going on, my guy? Kendra Taylor says, Florida Evans, damn. Y'all like the meme that I made? I made the meme where I was like, damn, so I did a photo shoot and I made a couple photos. So hopefully that's fitting to what we see what's going on today. Oh, that's my guy, Alton. What's going on, Alton? Thank you for tuning in, man. He says, greetings, family. Greetings to you as well. Thank you for tuning in. Pete for Life. What's going on, Pete for Life? He said, hey now. What's going on, Pete for Life? In it, Marcus Salone Sr. Okay, he's from Indianapolis in Atlanta. All right. Okay, Indianapolis and Atlanta is in the building today. And Al, that's my guy. Al, what's going on, Al? I'll see you in a little bit. We got Al in the building. Dana Dice, what's going on? Dana Dice, that's my guy right there. That's my brother right there. He's down there in Florida. Thank you for tuning in. Who we got here? We got Young Kim. Thanks for all your work. I definitely appreciate it. What's going on, Young Kim? And we got Dakota Johnson in Northern Activity, man. Keep doing your thing. I love tuning into your live streams. Dakota Johnson, man, I definitely appreciate you too. You greatly appreciate it. Oh, yeah. I think it's pretty crazy. The first comment of everybody, somebody got on to tell me that my channel was dead. And it was right. I was gone for, I don't know, about a week and a half or something like that. But you got up, you stopped doing what you were doing to wake up and find some dead channel and let them know it was dead. I think that's pretty ridiculous because I don't know any dead channels because I don't follow them. I follow a lot of people here. I follow a lot of people in support. But yeah, pay that no mind. Appreciate it, Dakota Johnson, man. Thank you for reminding me to stay on point. That's Picasso. He says, nice to see you back. What's going on, Picasso? Oh, yeah. Dakota Johnson. There you go. He says, all good from VA. We got VA in the building, Indianapolis in the building, Florida is in here. I can't think of Phoenix. That's my guy P for Life. I know he's from Phoenix, right? And that's it. I think that's it. So I think we got everybody. So ladies and gentlemen, let's get into it. Let's talk about what's going on today in this market news. Let's go ahead and share this. Ladies and gentlemen, this is why you must know your history. Here we go again. We've had a 900-point drop in stocks due to what? They're saying, oh my God, here we are again. We are back in the pandemic. Ladies and gentlemen, last year when I saw the pandemic, I was afraid myself. I was like, man, what's going on? I had never seen a pandemic before, like most people. And now here we are today. This new variant came out, and they're saying it started in a couple countries, South America, South Africa, something like that. I'm not a health person. This is not a health channel. But, we already know that what this is going to lead into. Ladies and gentlemen, this is exactly how it started off in January. We was already dealing with a supply shortage already, but now we got this COVID thing that's jumping back in. Everybody gets scared. I wish I had a sound there that says sad noise or whatever, but I don't. So what ended up happening, everybody comes back and they automatically say, man, we got this pandemic going on. Oh my God, the vaccinations, we got to get vaccinated. Everybody gets scared again, ladies and gentlemen. Ladies and gentlemen, this is what creates the bubble. Last month, everybody was talking about, man, when that pandemic came, I should have brought this. When that pandemic came, I should have brought that. This pandemic was a great time to invest, right? Here we are again. We're seeing stocks drop 900 points. Now, the sad part about me seeing these stocks drop 900 points is that I wasn't able to take full advantage today on the Black Friday, but hopefully I get a chance to, hopefully this carries on to Monday where I can have a chance to redeem myself. All right. So let me see here. I see that I got a little lag going on. Now let's get into the most important piece. You say, Prince, we are in an expanding economy. What do you mean? What do you mean? So we're saying here, hold on, I got a little lag going on my video. Let me see if I can straighten that out for a second. Y'all give me one little second. This is what happens when you don't. Oh, okay. So that's not that. So I'll give it a second to kind of come in. Let me see what y'all say in the comments before I get back to this as well. Hopefully it's not playing the same thing going over. Hold on, let me see if I can catch y'all comments. I'm getting a little delay here. Y'all give me 1 second, man. I haven't used my platform in a minute. Alan says, embrace the haters. You must be doing something right. He said, you must be doing something great if you have time to say that. I love it, So right here, Young Kim says, you the person who taught me doing options on E-Trade some years ago, doing pretty well on the same options game, made 16. All right, Young Kim, what's going on? He said, I made 16K this week on options. Nice. Congratulations. He said, thank you for teaching options trade. I need to get back into that, huh? But the reason why he said, I learned from your YouTube videos. Thank you, Young Kim. Thank you for tuning in. So y'all give me 1 second. Let me refresh this because I'm getting a little lag here. Y'all give me 1 second. I don't like the way I look with a lag. All right, there we go. I'm back, ladies and gentlemen. So let's get into it. Let's get into it. Let's get into it. All right. So people say, Prince, why do you believe we're in an expanding economy? Ladies and gentlemen, let's go down to the, as you come in, hit that like button, show some love, show me some love here. I see we got 20 people in here live. Hit the like button. I definitely will. 21 people in here live. Definitely hit that like button, the share button. Let me know what's going on. So ladies and gentlemen, this is the first thing. You have in the economy, you have a trough, you have an expansion, you have a peak, you have a recession or a contraction. So when you see this, ladies and gentlemen, you have a trough, expansion, peak, retraction, and then back into the trough. Those are the economical cycles. Where are we right now in the cycle? And how can you tell where we are in a cycle? Now, in a trough economy, this is when, the stock market has bottomed out. You're seeing stock markets, real estate, equities market, everything is falling out, right? The list goes on for the trough. Now you have a contraction, a recession. Are we in a recession? No, we know we're not in a recession because we will have 2 quarters of a declining GDP or 3 quarters of a declining GDP. We have unemployment going up, things like that. Those are the characteristics. Now we go into, are we at the peak of an economy headed into a recession? That one is kind of hard to say. The peak in expansion for me is kind of hard. The only way you're going to know what a peak in the only way you can pick out the peak of the market is probably after you start to see the bottom of the market. So as the market is going up, as the economy is expanding, just like when we was in 2008 when the stock market crashed, in 2009 we went into an expanding economy. We peaked out apparently in 2020 when the pandemic hit. Now we had a nice little drop. Now we're looking at ourselves going into an expanding economy. Now let's look at some of the characteristics of an expanding economy. Some of the things I wrote down here. You have 2 quarters of a gaining GDP. You also have employment. Employment is starting to drop. When you have low unemployment or no unemployment, unemployment is continuously dropping. That's an expanding economy. Building permits. Are you continuously building? Real estate, manufacturing goods and orders, right? Manufacturing jobs are very important because in order for you to order for me, I'm an author. I own 3 books. If you haven't gone and got those, go ahead and get those already, available everywhere. So in order for me, the more books that I order, the more workers have to work. The more workers that are working, the more the warehouse have to hire. When not that many new orders are being placed, manufacturers start to decrease their work hours. So manufacturing is a great economical indicator that people follow. Now, how can we find this data? We're going to use a couple of sites tonight because, ladies and gentlemen, in order to read a financial report like a genius, you got to grab your Investor Show cup. It is the only way to do it. So with this being said, you have to have what? We're going to go to the Department of Labor. We're going to look at the U.S. Bureau of Labor Statistics, and we're going to go to the Department of Labor. We're going to go to the Mortgage and Bankers Association, and we're going to look at the GDP report provided by what's their name? What's the site name? I'm almost embarrassed to say I don't know this. The Bureau of Economical Analytics, right? So let's take a look. Now, let's see what y'all say in the comments before I get back here. That's my guy, Michael Bott. What's going on, Michael Bott? What's going on, brother? How you doing, man? He said, hey, bro, glad to catch you live. It's been a while. Michael Bott, it's the best time to catch you, man. I've been gone now for about a week and something or whatever. Some people said my channel was dead and all of the good stuff like that, but I'm glad to be back. So the first thing we're going to look at, ladies and gentlemen, let's look at this GDP. How has this GDP been performing the last 2 quarters? This is our gross domestic product. How much products have we produced in our borders over the last 2 quarters? Is it going up? Is it going down? This is an economical indicator of a recession or an expansion or potentially a peak. Let's take a look. Let's head over to the Bureau of Economical Analytics. Let me share that with you guys and girls. Right here. Bureau of, where are we at? Don't try to hide from me. Here we go. Share this. Here it is on your screen for the people that can see it. This, ladies and gentlemen, I'm going to show you. So if you want to see this, this is the Bureau of Economical Analysis. This is the BEA.gov is where I'm seeing this. Let's look at the gross domestic product. In quarter 2, third quarter of 2021, you're looking at a 6.6% rise, 0.6% rise. Quarter 3, the second quarter, you're looking at a 2.1% rise, right? So you see, hey, our GDP, it is producing, it's positive. We don't see any numbers there, right? Now, has it been increasing? No, it hasn't been increasing. One of the ways we already know that, we know we're dealing with a supply chain shortage. Everybody knows that. That's no secret, So now that's one thing. Is our GDP declining or is it positive? What's going on with it? As you can see right here, when you look at this report back in, making sure I got this right, 2020, the second quarter of 2020, you've seen a big decline. Then you've seen this big jump in 2020, right? This is us coming out of that pandemic. This is when the pandemic, you've seen a negative GDP. You've seen our GDP take a big jump in the third quarter, slow jump in the fourth quarter, but you see quarter one, nice little bump up. So from quarter one to quarter two, you've seen from the fourth quarter of last year to the quarter of this year, you've seen a slight little increase in the gross domestic product. Coming in at our third quarter, we was a little bit of a decline. As you can see here, we went down to 2.1%. So we had this upward trend, but it's kind of tapering off right now. So we have to see how it looks on the GDP. But we don't have a declining GDP or a stagnant GDP. That's the first thing we're going to look at. Now, let's look at the next thing. The next thing I want to take you guys and girls to, let's look at unemployment, how the unemployment numbers are looking. Let me pull that up. Let me pull that one up. How the unemployment numbers are looking. I'm going to take y'all and we're going to head over to, I'm going to let y'all know the site so y'all can see this. This is not somebody who's just talking about it, but who's going to show you. Where are we at? Unemployment. Okay. I think it's our Bureau of Labor Statistics. Yeah, I am right. So here it is. This is our Bureau of Labor Statistics. Now, this is our latest economical report. We won't get our next one until about 2 weeks. The last one came out on Friday, November 5th. This is from the U.S. Bureau of Labor Statistics. This came out 8:30 a.m. Eastern Time, Friday, November 5th, released by the U.S. Bureau of Labor Statistics. You can follow this on bls.gov. Let's see what they're saying about our unemployment situation. So right here, they're saying the total non-farm payment employment rose by 5.31%. Pretty much unemployment went down by 0.2% to 4.6% in October, right? So right here, now let's see, where did the jobs happen? Job growth was widespread with notable job gains in leisure and hospitality, in professional business cycles, as in manufacturing. So right here, also in transportation and warehousing. Employment in public education declined over the month. Public education, I'm assuming kids can't go to school, all this online stuff, so maybe I can understand that. But the big thing is they're saying noticeable job growth would happen in manufacturing. This is something that happens in an expanding economy. Of course, everybody wants to call me when I'm on live, right? It's like the second and third call that I'm declining. So right here, you're seeing job growth in October. Notable industry was manufacturing. Job growth in manufacturing is a sign of an expanding economy, an economy that could be in expansion, right? So we also noticed that unemployment is on the decline. Unemployment now is at 4.6%. This came out November 5th. In October, unemployment is at 4.6%. But people are going to say, Prince, you're bringing up old news. That was November 5th. What are we talking about today? We're going to get into it, ladies and gentlemen. Let me remove that, get that out the way. Now we're going to head over. I never thought you guys and girls would ask. Now we're going to head over to the Department of Labor, who put out the weekly reports 7 days ago. Let's take a look at this. Some people are saying, hey, where are we at? Where are we at? Employment is very important. The reason why employment is very important because it is the backbone of our economy. Let's take a look. Ladies and gentlemen, if you're catching this live, don't forget to hit that like, subscribe, comment, and share button. Tell all your friends and cousins, all of the good stuff like that. That makes me feel good sometimes. Here we are, ladies and gentlemen. Transportation. This is a new report that came out November 24th, 8:30 a.m., right? In the week ending November 20th, the advanced figure for seasonal adjusted initial claims. Initial claims is when somebody go in, let's say if I lost my job today, I go in and put in an application for unemployment. This is an initial claim. So they track this, comes out every week on Thursday, Wednesday, Thursday. So this came out Wednesday, November 24th, 8:30 a.m. because Thursday was our Thanksgiving, right? So it came out a day early. So it says the initial claim was 199,000, a decrease of 71,000 from the previous week revisited. This is the lowest this is the lowest level for initial claims since November 15th, 1968, when it was 197,000, right? This is the lowest people that have claimed for unemployment since 1969, way before I was born, at least, right? So right here, when you're looking at this, you're saying, okay, less people are filing for unemployment because everybody said, oh, people at home soaking up unemployment. This is why you're seeing McDonald's starting off at $17 an hour. Amazon, the lowest pay at Amazon, $15 an hour, excuse me. Why is this happening? Because there's a very competitive market for labor right now. Why is there a very competitive market for labor? This is what happens in an expanding economy, ladies and gentlemen. In an expanding economy, less people are filing for unemployment. You're seeing McDonald's and everybody, Domino's Pizza, everybody's going to $15, $16, $17 an hour, and they're helping you out with college. All these benefits for people with little to no education requirement. Why is that? This is a sign to me of an expanding economy. I hit the wrong sound effects. That was mine. You're going to learn today.
You're going to learn today.
So with that being said, ladies and gentlemen, let's get back to it. Now we have people, some people said, hey, people are sitting at home getting unemployment checks. But right here, the Department of Labor just told you less people since 1969 have not filed for unemployment. We've never seen these numbers this low for initial claims. October, unemployment dropped by 0.2% to 4.6%. Then we're seeing, when you watch these weekly jobs reports kind of hit lower and lower, that lets you know the November jobs, the November unemployment numbers are probably going to be a little bit lower than 4%, 4.6%. All right. Now, with that being said, you got to ask yourself, what is going on in the world around us? Prince, we just looked at that jobs report. Now we got to slide into, I should have already had this ready. What is happening in the stock market? What happens in an expanding economy stock market? Stock market hits an all-time high, right? A prime example, what is real estate doing? Crypto has turned into an asset class. What is crypto doing? I mean, don't look at it today. Yes, there was a big, everybody got scared today. But overall, real estate, crypto, the stock market, what are they all doing? Let's take a look, ladies and gentlemen. Let's head on to one of my favorite sites, the Bureau. This is the Mortgage and Bankers Association that I'm going to share with you guys and girls on real estate. Let's see what's happening. I'm going to tell you why I do this to follow real estate. Now, anybody that has purchased a home in the last year, if you purchased a home in the last year or beyond, you're seeing great equity, right? You bought a house last year, this year you're up 100,000, right? So here we go. Mortgage and Bankers Association. This report came out on November 24th. Was that Thanksgiving Day? No, day before, right? Right here, coming out from Washington, D.C., November 24th, mortgage applications have increased by 1.8% from the week earlier, according to the data from the Mortgage and Bankers Association weekly mortgage application survey for the week ending in November 19th. Here we go. Let's see what they got to say. They say the financial markets continue to discern the Federal Reserve's policy's path to its upcoming months in light of current high growth, high inflation. Everybody talks about that high inflation. High inflation is a characteristic of an expanding economy. When you have too many people chasing too little goods, this jacks up prices. Shout out to my economics teacher, Mr. Crow. What's going on, Mr. Crow? That was my 9th grade economics teacher. He taught me supply and demand. Supply and demand. So right now, when you have a bunch of people with money, people are getting money thrown into their accounts, people getting stimulus packages, people getting children money, whatever they're getting. The demand for goods and services increase. People want to buy more. People do more stuff with their money. Now that people want this money, what's going to happen with this money, ladies and gentlemen? People are going to take this money and do what? They're going to buy goods and services. If demand increases, supply stays the same, what happens to the price? Price goes up. When the price of goods and services start to increase, now you're seeing inflation going on. Also, I'm not an idiot. I also know that inflation was contributed to by us printing a bunch of money and lowering inflation. I mean, lowering the interest rates and printing a bunch of money, putting it into a bunch of people's hands via stimulus. We just passed another $1 trillion bill. So that is a contributing factor as well. But high inflation is a characteristic of an expanding economy. So right here, despite a fair amount of volatility last week, mortgage rates were higher, with the 30-year mortgage rate increased by 4 base points to 3.24%, said Joel Kland, MBA Associate Vice President of Economics of Industry Forecast. Despite the increase in rates, they're talking about the increase of mortgage rates. Despite the increase in rates, refinance applications rose slightly, driven by a 2% gain in conventional refinancing. Borrowers continue to lock in mortgages in anticipation of higher rates in the future. Refinance applications were still more than 30% below than a year below. So right here, mortgage rates have increased. I think the average is 3.24% right now. So you're seeing, even though people are anticipating rates to rise, so a lot of people are doing refinancing and people are refinancing, people are still purchasing homes. My thing is, are people buying homes? How is the real estate market doing? It's at an all-time high. Stock market, all-time high. Crypto market, all-time high. Unemployment, the lowest numbers of initial job claims you've seen since 1969. GDP was off slightly in the third quarter, but we had 2 months of an increase in GDP before that. These are the indicators I'm talking about I want people to look at. We're going to get some more into this. Let me close this out. Now, when we look at these things, let me see what y'all say in the comments before I go any further. I'm going to look into some of our economic indicators. Okay. Then we're going to get into our economical indicators. We're going to head over to which site I'm going to. I'm going to the U.S. Bureau of Economical. No, I'm going to the Census Bureau. I'm going to the Census Bureau to look at economical indicators. So I'm going to type this in so y'all can see it. So if y'all coming in, don't forget to hit that like, subscribe, comment, and share button if you haven't done so already. Okay, now I'm going to call economical indicators. So we're going to get into these economical indicators that are provided to us by the Census Bureau that you can look up yourself. Let me see what y'all say in the comments before I roll into this economic indicators. He said, that's not catching you for a while. You're doing, he said, that's me not catching you for a while. You're doing big things. Appreciate that, Michael. But man, keep me motivated, man. You know, I appreciate it, Michael, man. You know, the first comment that was waiting on me as soon as I came in and looked in is, hey, your channel is dead. And to see all you guys showing love, I definitely appreciate it. Brock in from Canada. He said, hey, Prince, happy Thanksgiving. Brock in, happy Thanksgiving, man. Thank you for tuning in. I love his profile picture, by the way. His profile picture is hilarious. So I think that's Ingrid. I'm just call you Angel. Angel R. Hello, it's been a long time. It has been a while. What's going on, Angel? Thank you for tuning in. Thank you, thank you, thank you. Appreciate it. So unpopular thought. He said, we have a competitive market for labor, yet my job hasn't given us a pay increase. Burger King is looking good right now. You know, I got to give it a little laugh there. He said, we have a competitive market, but my job hasn't given me a pay increase. And Papa thought, man, you got to tell them, hey, you know what? You better start shopping that resume around, you know, shopping that resume around. But that's pretty funny that he said Burger King is looking pretty good right now. Brock Ian says, reminder, if you haven't gotten a 0.5% raise, you should just get a pay cut. You're right. because also inflation. If you haven't gotten a pay raise and you're seeing inflation go up, you've gotten a pay cut on top of that. If your employer is not giving you a pay raise, you're taking a pay cut. You get that? Inflation is the invisible tax, right? So let's get into these economical indicators, ladies and gentlemen, provided to us by the Census Bureau. We want to know, where are we at in this economical machine? Some people say, hey, we're about to fall off the map, you know? So here we go. Let's look at this is coming from the census.gov economical indicators. On November 24th, that was released yesterday. Was that yesterday? I keep looking at the day before yesterday. I was thinking, let me make sure I wasn't messing up. It's my guy, Randy. See that they're having a stoke. Okay, I see you, Randy. He said, okay, new residents. This came out on November 24th, right? Comes out every month. The next one don't come out until about Christmas Eve. Sales of new single-family houses in October 2021 were at a seasonal adjusted annual rate of 745,000. This is a 0.4% above the revisited September 21st estimate of 742,000. So there we go, single-family homes. All right, let's let me know about real estate. Let's see which other reports. Durable goods in October. Let's see what they look like in October. So durable goods is very important because these are big items. Like, for prime example, a family that decides to buy a new wash machine and dryer, they only buy wash machines and dryer when they're doing pretty good. So people take a look at this to see how much has it changed. So it says the new orders for manufactured durable goods in October decreased 1.2 billion or 0.5% to 260.1 billion. Slight decrease in October on durable goods. Let's see. I'm not going to go through all these economic indicators, but I'm going to take a look at them. Okay. It says the average wholesale inventories. This is very important. Inventory numbers are very important because when companies beef up their inventory, they have an anticipation to sell. So for prime example, if I think I'm going to sell a lot of books, I'm going to have more books on hand to sell. When my books are not in demand, I don't keep that many on hand. That's why some people may order books. Some people may order mugs. They may want autographed books or whatever. I may have them on hand. I may not have them on hand, depending on how the demand is. So right here, here's a release. It says on November 24th, October end of month inventories were 758.5 billion, up 2.2% from last month. So we had an increase in average wholesale inventory. Okay. All right. That's pretty good. We're seeing an increase in advanced international trade goods. We're seeing an increase in advanced retail inventories. We just talked about retail inventories. Selected service revenues. It says the advanced report, the U.S. selected services total revenue for the third quarter adjusted for the seasonal variation but not price change was $4.5 billion, an increase of 3% from a seasonal adjusted rate of 5.2%. So we had an increase in selective services revenue. What else we got here? New residence construction slightly down by 0.7%. Business inventories are up. Advanced monthly retail sales are up. International trade is up. We're looking at business formation statistics. This is kind of staying the same. I think that's the one where people create companies. Monthly wholesale inventories are up. Manufacturing goods are up. Home ownership rate, look at this, up 65% in the third quarter. That's crazy. Rental vacancies are slightly up, right? Because people are probably buying houses, I'm assuming. Construction spending. So here, when I look at construction spending, I look at this. Quarterly profits, manufacturing is up 26%. You're seeing a slight drop in construction spending. This is something I keep an eye on because building permits and construction spending, that lets me know when they're going to slow down on doing certain things, just like manufacturers. Retail quarterly profits are up. Manufacturing reports are up, right? Manufacturing profits are way up. Quarterly profits for retails are way up. Now, if you want to see the press release, you can do that as well. I can click on this to see the actual report itself. Let me see if I can pull that up for y'all so y'all can see how it looks like. So I can get the summary, and then I can also look in to see how it looks individually. Let me take a look into this for y'all for a second. Let's see what we got here. So here we go here. This came out Friday, September 7th. This was a little bit old. I think this probably comes out once a quarter. So this is the actual report, how it looks. If you wanted to look at the large U.S. Retail Trade Corporation second quarter, this is how the actual report prints out that I was showing y'all a quick summary of. So yeah. So when I look at all these economical indicators, let me see what y'all said in the comments. Rod Hamilton the second said, though he said the GDP Q1 and Q2 were both high, reflecting the expanding economy. The third quarter is decreasing sharply. Yes, that's true. We do have one quarter. That's why we're going to have to look at the next quarter. This was going back to that whole supply short change that people were looking at, right? So you're right, Rod, that we looked at earlier, that we was looking at the GDP, the gross domestic product. Shout out to Rod, dropping gems up in here, coming in here, looking at economical indicators and talking about them. I like talking about this stuff. So when I just see one quarter, is it something that was off of that one quarter? I got to see the next quarter. Are we going to see, is the next quarter going to be even lower, or is it going to be even higher? And I believe quarter one and quarter two were so high because we was coming out of the pandemic as well. You know, I think we had a lot of bottled up supply in the Q1 and Q2 numbers looked drastically big, because you got to look at the Q4 numbers, the Q3, Q4 numbers. We were drastically down. So we was drastically down. We was pent up, and we seen this big jump come in. Right here, he says, do you expect a sharp decrease in the GDP in the fourth quarter? Well, with this pandemic thing kind of growing new legs, I can potentially see that, because I think we're going to handle it more aggressively. The last pandemic, when it broke out, I don't want to say that word because I don't want to get banned and all that good stuff like that. But when this virus broke out the first time, it was kind of like, it's a virus in Asia. Then it was kind of like, whoa, somebody actually here has the virus. Y'all give me 1 second. I almost knocked one of my lights on me. So when it was like, oh, wow, somebody here actually had the virus, it was a big deal. Now that this time we're reacting so fast, we're shutting down planes, we're shutting down people from coming over here so fast that we're having a knee-jerk reaction. So with this pandemic going on, I can see a slight decrease or something in that average. Rod Hamilton, thank you for tuning in too. Young Kim says, nice, 21 viewers now. Oh, yeah, definitely. Appreciate everybody for coming in here and supporting. Appreciate that. Appreciate that. Everybody that came in is coming in. Unpopular thought. He said the housing market is big in Florida. They are building new communities all over the place. People are buying as soon as they're finished. It's the same thing that's happening in Colorado, the same thing that's happening in Nevada, the same thing that's happening throughout the country. Unpopular thought. I started getting back on the road. I want to say this year. I was in Detroit. I did an interview out there in Detroit. I was in Detroit earlier this year. Then I was in St. Louis earlier this year. I was in Kansas City earlier this year. I was in Houston, San Antonio, just came back from Las Vegas and Phoenix, Arizona. So a little bit of the Midwest and the South, and coming back. It's all over the country right now. Unpopular thought. It's all over the country. So it's not one place. Then we're having the economical data to back it up. We're watching the Census Bureau of the Economical Indicators, and we're watching the Mortgage and Bankers Association. So it all makes sense. Ladies and gentlemen, when you see so much construction, those are signs of an expanding economy. Rod Hamilton brought up a great point about our GDP, but I look at all the data and I put it together. I put unemployment with the real estate, with everything together, and then I make my own synopsis that, hey, we're in an expanding economy. And when you are in an expanding economy, it just doesn't feel good every day. See, the last bull market that we was in started in 2009, going all the way to 2020 to the pandemic. It was a bull market, but it didn't feel like it. I didn't wake up every day feeling like, oh, money is just raining out of the sky. This is a great time to be alive. It didn't feel like that. The market was going up, then it would drop, go up a little bit, drop, just kind of what we're seeing today. And it was always some big scare. The real estate, President Trump, President Obama, this, interest rates, that. So many things was going on that kind of threw me off of just riding that bull. Ladies and gentlemen, I'm telling you right now, these are buying opportunities and to ride the bull. Remember your history. In February, when this pandemic broke out, everybody got scared in March. Stocks fell all over the place. But guess what? There were some bold that people last month said, man, I wish I would have invested, man, when that pandemic broke out. Oh, man, I wish I would have invested when that pandemic broke out. Now here we go again. I wish and I hope that we have another down day on Monday so I can really get in and make some moves like I want to make, that I was able to slightly to make this afternoon due to my own bad scheduling. So anyway, ladies and gentlemen, that's going to conclude today's topic and episode. I'm definitely glad to be back. I'm glad to see you guys back in here. Oh, that's my guy, Max B. What's going on, Max B? He said, we had a 3% drop down in the market, but we're still up 22%. This is what I try to tell people, Max B. We saw this last year. You was here on these lives when we saw this same exact thing happen last year. So today, ladies and gentlemen, we went through the economical indicators. We went through the GDP report. We went through the economical indicator reports. We went through the jobs report. We went through the unemployment report. We went through the real estate report. What other reports we went through? GDP report. The Bureau of Economical Analysis. We went to the BE website, the Department of Labor. We bounced around a lot of places to look up economical data that you can see, ladies and gentlemen. Before I came on the show, this is how I do the show. You're not going to be able to see it because I highlighted it in green because I have highlighted markers all over this thing. So I'll show you this page. So you see the show, you see that? All this stuff right here. These are things I already read and made highlighted markers on top of it already before the show even came out. These pages I've already printed out and read all the way through them because I'm weird like that. I'm a guy who will sit down and read economical reports. Of course, you got to do that with your investor show mug. It makes reading reports so much easier. So yes, those are my thoughts. Those are my ways of looking at it, going through all these reports. Thank y'all for bouncing around with me. We went on a fishing trip. I haven't used that term in a while. We went on a fishing trip. We packed our tackle boxes and we went and we looked into the BEA, the DOE, the BOL, which is the Bureau of Labor Statistics, Department of Labor, and the Bureau of Economical Analysis. And we also went to, where else we went? MBA, Mortgage and Bankers Association. I can't remember where else we went. He said, I was thinking that too. I want to see another down day, 2 or 3 in a row. That'd be nice. But ladies and gentlemen, thank y'all for rocking with me. I know I have people waiting on me. I have to go do things out tonight that I have to go get taken care of with the family. I want to wish everybody out there the nicest greetings of happy Thanksgiving. I think all of the people that tuned in, all of the 20-something people that tuned in tonight, I definitely appreciate it for y'all coming in. The people that's rocking with me right now, even though I've been gone now, MIA for about a week and a half with traveling and getting my thoughts and relaxing, getting all my things together. You guys and girls was holding me down and was holding me down even when I was gone. And even when I came back, y'all came in and was still rocking with me. So I definitely appreciate that. I definitely am grateful. That's what I'm grateful for on Thanksgiving. Hopefully y'all had a great Thanksgiving. If you didn't have a great Thanksgiving, know that I'm thankful for you. And hopefully you have a better holiday. When we come down to Christmas, I'm going to do another Christmas giveaway. Last year, I think I gave away $45. I think I gave away $40 for hitting 40,000 subscribers. I think today I'm at 46,000 subscribers, almost 40,000 just on YouTube alone. So I'm going to do another Christmas giveaway. So I probably do whatever my subscriber count is. I think it's at 46, maybe 40,000, 47,000, whatever it is, 50,000, whatever. I'm going to give away that in dollars. Now, I know 47,000 is going to be $47. I ain't to that point yet. So we're going to award those. Something the holiday season, I'm going to give back. If I have 47,000 subscribers, I'm going to, if I have 46, I'm blessed to have that. I'm going to award that to the followers, just like I do every time, just like I did. I really enjoyed that last year. So I think I gave away $40 last year. Now I'm at 46, 47,000. I'm going to do that again this year. So I'm definitely appreciative. Young Kim said, have a nice one. You too. Brock Ian said, have a nice one. You too. Unpopular Thought says, peace. Ladies and gentlemen, with that being said, y'all already know what time it is. My name is Prince Dykes. This is the Investor Show. Until the next video, podcast, cartoon, or whatever else crazy y'all see me do around the globe. Peace. Be safe. I'm out, and thank you.